Is we Gucci in the Coochie? Yes, we are. Yo, what's poppin', guys? I hope you guys are doing great. I'm doing great. I'm doing fantastic. I know it's been a bit in a tit, but I'm back, and I wanted to just cover a little bit of XAU. And this time I'm back on TradingView instead of MT4. Had a couple people message me in I believe it was my Telegram DMs saying that they would prefer if I were to do some of the breakdowns on TradingView as opposed to MT4, because on MT4 you can't see all of more stuff on the MT4. It's more limited. I get that. I mean, I just don't quite get why you need to see all of this when really we're just dealing with this piece of structure, but doesn't matter, because anything you guys ask for, I will do my best and try to accommodate for it, of course. But please don't put your bets on me using TradingView all the time. Most of my videos are going to be based on MT4 because that's all I use. I don't use TradingView anymore to analyze my charts. I just use MT4 on my iPad. So yeah, I'm going to definitely be posting more MT4 than TradingView because it's convenient to me. But where I can, of course, I will accommodate and give you guys what you prefer. All right, so I want to talk to you guys a little bit about gold. I don't trade. I mean, like this entire month, I think I've placed one trade on Euro USD, which is just a little bit of an intra/scalp. And yeah, that's it. But gold has been treating me like a gentleman, bro. So let me talk to you guys a little bit about some of the SMC entries that you guys could have taken, because again, no matter what strategy I use or no matter what strategy you guys use, it seems to never bother the 10 to hundreds of replies that I get in my Telegram DMs and some screenshots sent to my Instagram where you guys are literally taking the same damn trades as me using smart money concepts. And I'm like, wow, okay, that's good, because that's actually what I wanted to achieve. I want all of us to, regardless of our strategy, be able to catch some sick trades, and that's what you guys are showing that you guys are actually doing. And the fact that you're learning it from my YouTube, I'm feeling super good about myself as well. You know what I mean? It's just a normal human feeling. Like, oh wow, these guys are actually doing great with something I've shared, with a piece of information I've shared. I'm always happy about that stuff. But anyway, let's not go there. Let's get right into this. So, a couple people asked me questions about the buy I took in here. Again, guys, if you guys want to check out all of my entries, I always post my screenshots. Sometimes I even do trade callouts and callouts of levels like I did the previous week where we caught the swing over here. A couple people sent me screenshots of them also catching the swing from my price level on gold, which I'm very happy for. Good for you guys. I caught the swing as well. But yeah, so go ahead to my Telegram. It's first link in the description. In fact, it's the only link in the description. And it'll lead you to some of my screenshots that I've posted up for you guys to showcase my entries. So you guys can learn from them, of course. So how did I get this entry? And then there was another entry, obviously, that I took over here, right? And then I took a loss over here. It was a minor loss because I took a high risk buy. I was basically trying to hedge a buy in here. And then, yeah, that's basically it. To be very honest with you, that's just basically it. That's all we're going to cover in this video, at least. If I wanted to cover more, I will for sure cover more when I can. Yeah, for sure. So for now, yeah, these are the three things that I wanted to talk to you guys about. So, all right, let's get into this. So when it comes to this entry, right, it comes from the understanding, if again we're going from smart money concepts, it doesn't matter what I use, because as I said, it doesn't matter what strategy anyone uses, you guys can get the same entries as me. I seem to be getting the same entries as you guys, so it really doesn't matter. What matters is the approach, right? So that's it. That's all that matters, is the approach to taking the trade. So we're looking at this. What can we see is a bullish structure on the daily. There isn't much detail whatsoever. However, let's take a look at our market direction. The first thing, all right, let's fill some stuff in real quick, guys. Why don't we fill some things in, okay? First thing is the market direction. Okay, so the market direction, weekly, week high, okay? Why is this a weekly week high? Simple, because over here, this structure, this buy to sell, can you see that this sell it failed to break the lower low? What does that mean? What does a failure to create a lower low means? It means that this is a weak high. A high that fails to create a lower low. Again, go back to the first ever video I posted on this channel, which is a strong high, weak high, strong low, weak low thing, right? A high that fails to create a lower low is a weak high, and a weak high should not be traded from. That's my opinion. It's not financial advice, okay? I'm not a financial advisor. That's my opinion, okay? And similarly, if we have a low that fails to create a higher high, for example, a low that fails to create a higher high, can you see how this high, there's no body close above this wick, right? That's a failure to create a higher high. This low that fails to create a higher high, that's going to be a weak low, and that should not be traded from. That's it. Doesn't mean that you can't trade from it. It should not be traded from. So you can see we do have ourselves a very beautiful reaction, okay? But it should not be traded from when it comes to something that's strong or something that you expect to hold. All right, so when it comes to our direction, at least on the weekly, we expect Again, I want to emphasize in this video how unimportant liquidity is when structure does not add that confluence. Liquidity is for context. And structure is, liquidity is for context / confluence. Structure is your basis, your fundamentals, your stepping stones, your ladder, your staircase to that liquidity. You understand what I'm trying to say? So, all right, let's take a look. Market direction, weekly, week high. This is what we expect to get. So, when we see that this is our liquidity-wise direction, right, at least on the weekly, we want to ride that structure to the liquidity. You know what I'm trying to say? And then spot QMs along the way. I also got a couple questions. Avi, I get how you trade reversals, but how do you trade continuations? Spot QMs, right, in favor of the direction of that liquidity. What's the direction of the liquidity? Up in here, right? And of course, we're going to have liquidity with every single week high on the lower time frame. So this would be like our big boy liquidity hunt. You know what I'm trying to say? Like our big boy target, where if price takes this, you can bet your ass that there's going to be some kind of a major retracement. You know what I mean? See how many people thought that this FVG was going to be filled. Inefficiency was going to be filled. How many thought that this imbalance was going to be filled, right? How many people thought that these equal highs were going to be filled? We're going to talk about that in a second, all right? So when we're seeing this, all we need to do is source for lower time frame QMs to go and get this high. And it doesn't mean that if we, let's assume that this is a lower time frame QM, which it was, we bought here. It does not mean, let's say we bought with a standard lot, we're not going to hold that 1.00 all the way up in here. That's stupidity, right? We have a week high with every single bullish QM. So for example, I'll give you guys a little bit of a hint, a little bit of an example. Here, we have a bullish QM. Again, guys, you want to call it SH, BMS, RTO, QM, it doesn't matter because it's the same bloody thing, right? In fact, I could go as far as to say a QM is just a head and shoulders pattern, heck, with more detail, of course, that's it. But anyway, let's come back to this though. We have ourselves a bullish QM, okay? This is our inducement here. Again, if you guys don't get what I'm talking about, refer to my first ever video, please. I am not going to answer what is a QM. I don't cover what a QM is because you should already know that shit before you come to my channel talking about that. You know what I'm saying? So, okay, coming back to this though, what do we have? It's real simple. Let's go to our path. Let me show you guys. All right, boom. That's our liquidity, of course. And then we take that liquidity and we mess about. Point being, we break, and that is our inducement. Okay, so I'm just going to stop it right here. If we take that, you can see exactly what I'm talking about. We take the liquidity, strong low, break the structure, right? Strong low, weak high, see? Strong low, we break the structure here, weak high. Okay, I didn't draw it too well, but weak high. Okay, take this low here. Okay, when it comes to liquidity, we'll talk about this in a second, but we have two things. When it comes to liquidity, we have a failure to create a higher high, or we have an SNR. Okay, so we'll talk about that in a second, okay? But we have a failure to create a higher high, which this does not do. It actually does create a higher high. So this becomes the liquidity. Obviously, you're not going to be looking for a buy in here. What do you think price is going to do, right? Price is not going to go like this. It's not going to do that, ever, okay? So price does this. It's actually liquidity for this guy is in here. And the two POIs, when it comes to an SMC standpoint at least, that we can see is this imbalance down in here, as well as this order block down in here. Okay, so when it comes to this, in fact, I'll also talk about the buy that I did over here when it comes to an SMC standpoint. Very, very simply, you understand your weeklies to go and get this liquidity. Okay, and you understand that when it comes to your sells, right? Again, when you're looking at your buys, also understand the sells. When it comes to your sells, we're looking, when it comes to sells, in here to be our area to provide us with sells. Okay, so for example, we have this bullish QM. Draw it real swiftly. I'm not trying to take too much of you guys' time. Is this all working good? All right, 9 minutes in, we're fine. We're doing well actually. We take the liquidity, we break the structure, and just like that, we have the inducement. Again, if you guys know hindsight, well, you could see all my entries in the Telegram channel, so it's not hindsight because I actually took the entries. Price. What do you expect? You expect price to come and take this liquidity either into here or into here. So, for example, this is your POI. Go ahead and, by the way, guys, go ahead and back test. Like, okay, this area. Go ahead and back test whether you would have taken a loss in here. What's the structure that would have done? This is not a back testing video. I'm trying to be objective and cover each and every single trade. But what I would love you guys to do, again, I'm not a financial advisor or anything like that. I can only suggest you guys to do things. Go and check up what exactly happened in here. Okay, whether there was a trade that you could have taken and then you would have hit a loss or what. So you understand, you're comfortable with, oh man, I took a loss here. It's okay, I recovered it back in here. Or maybe over here, there's just nothing telling you to take a buy. So you just didn't take a buy. So you saved your money, you saved your margin. Okay, cool, nice. You know what I mean? You understand more and more about the strategy. Price hits in here now, okay? What do we look for? It's a H4 area. Okay, what do we have, guys? We have ourselves a strong low. I'm just gonna mark these things up. We have a strong low and a weak high. Okay, we'll just mark the weak high since we're looking for a buy. Your target when you buy in here is just to take your liquidity here. Who says it's going to 100% go in here, right? So take your liquidity. You could have, firstly, I'll tell you guys what your safe TP is. I'll tell you guys your obstacles, etc. So in here, you would look for a lower time frame QM. So for example, I'm just giving you an example, a H1. Okay, we take the liquidity, break the structure here, inducement in the form of an SNR. Resistance becomes support, and then we take the liquidity, and then we go in the right direction. Okay, that's your inducement right in here. So price hits in here, you can look for a lower time frame, or for example, you can just hit your 15-minute, because this is already a confirmation. You see this H1, it's already a confirmation on the H4. So why are you looking for another confirmation on a confirmation on a confirmation? Nah, you know what I mean? You see, there comes a point you just need to freaking enter. You know what I'm trying to say? So right in here, for example, you know your strong low is in here, right? So you could, for example, take an entry in here. There's a imbalance close. You could take an entry right in here with your stop loss below. Again, that all depends on what you're doing. Perhaps if you understand your safe stop loss is here, if you want to be a bit more aggressive and have a better RR, you can always put your SL down in here. You can always put your SL down here, right? But if you get stopped out and price doesn't actually take this low and then flies in your direction, you only have yourself to blame. So coming back to this though, that's how you would have done that. You definitely don't want to be buying in here. A lot of people be like, oh, let's buy in here, etc. I mean, you can see how there is a reaction, right? Why? Because we take the liquidity here, stop hunt, break the structure, inducement, order block, comes inside, takes the liquidity, and flies up. You see what I'm trying to say? So that could happen as well. Why does price react to sell here? Simple. Take the liquidity, see this? Up, down, up. Take the liquidity here, break that structure here, inducement, SNR. Right? This is YouTube SNR, not the one I use. SNR here. So once price takes that liquidity into the QM, and then price goes down into this OB, and then price goes down, and this is the weak low, strong high. And then after that, I'm just reading you guys the intentions of the markets, okay? Price comes in here. Why does this one last? Why does this one last so damn long? Because it stems from the higher time frame. It stems from that H4. Here, H4, strong low, weak high. Now, when it comes to this, let's assume that you've had your entry in here. Let's assume you've had your entry, okay? What's going to be your exit? Or at least what's going to be your safe exit? Safe exit is going to be right here. Oh, wait, my bad. You've already taken it. My bad. Yeah, your safe exit is going to be here. My bad, guys. Sorry. Your safe exit. So you've entered here. Your safe exit is going to be right here. Why here? Why not here? Because we have a H1, H4 bearish QM. H1, H4 bearish QM stemming from this daily OB. Now, some of you smart Alex are going to say what? Oh, Avi, why would you take a sell in here? There are weekly equal highs. You can clearly see that there's a weekly daily equal highs. You're so stupid, Avi, for taking a sell from this H4, H1 bearish QM. Let me ask you a question. If that liquidity is so damn important, why on earth didn't he take the liquidity? No, I want to know the answer. Why on earth didn't he take the liquidity? If the liquidity is so important, why on earth didn't this liquidity get taken? I genuinely want to know the answer to that. See this? It's a freaking bearish pendant. Why didn't any of these sellers get taken out? Because liquidity doesn't matter. Again, liquidity doesn't matter where structure doesn't line up. Yeah, the market's moved by liquidity, sure. But you as a retail trader, you're going to tell me that you can read the intentions of the freaking algorithm. Nah, you can't. Get the hell out of here. Get the hell out of here, bro. I'll spank you. Okay, anyway, coming back to this. We have that. So what is our thing? What is our thing, right? Market direction, weekly, weak high. Okay? Excuse me. H4 bullish QM. Okay? And then from this H4 bullish QM, we have what? We have a H1 M30, because let's be realistic. If you're using a H4, I could even go as low as like an M15. You know what I'm trying to say? So a H4 M30 confirmation meaning bullish QM as well, right? So let me walk you guys through this real quick. Market direction, weekly, weak high. Okay, we understood that. H4 here, this is what I'm talking about by the bullish QM. H4 here gives the bullish QM. This one. See where my mouse is going? Bullish QM. Liquidity taken, structure broken, inducement, right? Now, when price comes inside that this H4 bullish QM where my mouse is circling right now, when price comes inside, H1 M30 confirmation, right? Am I right by saying that there's that? Yeah, there is. You can see that here. Okay, you can see that right here. Not this liquidity, this one. That's what I'm talking about. This structure. Why this structure? Because look, we made a buy, sell. Okay, yeah, sure, this is a structure as well. Sure, I understand that completely, but this is the high that caused the stop hunt. Am I right by saying that this is the high that caused the stop hunt? So that's the break, right? And then we obviously have our liquidity inducement validating the buy in here. Simple as. Okay, that's it. So that's what I'm talking about when I say the market direction, weekly high. You guys already get that. H4 bullish QM, which is this guy, and then when price enters that H4 bullish QM, you have that H1 M30 confirmation. Of course, you can even look at the M15. Sure, I completely get that. Let's look at the M15 real quick, right? Completely get that, right? You can see here we have a H4. Price didn't really touch. Price hits in here. Yeah, you can see that we took the liquidity, we broke the structure. Sure, it's the same bloody thing. This is going to act as the inducement. It's the same damn thing. It really literally doesn't matter. Okay, so we understand what our target is going to be the H4 week high or the H1 inducement. Okay, now let me walk you guys through that real quick. The target, all right, okay, H4 week high, this guy, because why? Strong low, weak high. That's going to be your target, right? Or safe target, meaning like you're taking your profits a bit earlier, is going to be the H1 inducement. Okay, which H1 inducement? Let me show you. So you see, okay, can you guys agree? We have the H4 bearish QM. Can you see that there is a H1, H4 inducement to inducement for what, guys? Inducement for what? This inducement here, to sell from this H4 bearish QM. Okay, so let's say you bought in here, right? Where's your safe TP going to be? Up here. Why here? Because guess what? H1 failure to create a lower low. Okay, this becomes a weak high, and if this weak high gets taken into this H1 bearish QM and then price drops, that can happen too. Am I right? That obviously that can happen as well, right? So that's why this will be your safe TP, and then your second TP can be here, and you can be done with the market. That's it. You set your own targets, guys. This is what I'm suggesting to you, but you can set your own targets, right? So that's that. That's literally it for this entire buy. That's the entire reason for this buy. We've just talked about it. Okay, we've talked about this buy. I'm just going to put this here just for reference reasons. Okay, that's your entire thing for the buy here. All right, now what happens next then? What happens next is you guys wondered how I got this buy, this buy right in here. Let me delete all of this and let's come back to it. How did I get this buy right in here? Very, very simple. We're going to keep the market direction there. All right, we're not going to keep the other one though. H4 bullish QM. Okay, I'll write these things down. See here, the buy is here. Okay, see what happens here. All right, H4 bullish QM. H1 failure to create a high. Now you guys can't see it until I go to the H1. So give me 1 second. H4 bullish QM. I want to see whether you guys can actually see it. H4 bullish QM. Okay, and then the liquidity, because that's the inducement. Okay. Okay, we want to see whether you guys can see it. Excuse me, I apologize for switching my camera. I mean, not camera, my screen a lot. Give me a second. H4 bullish QM. My bad. Okay, I apologize for this. It's yeah, I apologize. Okay, but anyway, we are 19 minutes in. That's fine. H4 bullish QM. Can you guys spot the H4 bullish QM in here? Again, guys, listen. Be simple with this, okay? Please be simple with this. This is our direction to come up here, okay? We are riding, because of this, we are riding H4 bullish QMs. No, we're just riding bullish QMs. Again, I keep on saying that your focus is to be Your focus is to be riding continuations H1, H4, right? So again, don't look at an M5 freaking bullish QM and think price is going to 100% hold that. No, there's a higher probability price is going to hold on the H1, H4 daily, for example. In this case, daily gave us nothing, right? Look at the daily, there's nothing. H4, H1, yeah, it's giving us a lot more information. So H4 bullish QM. Can you guys see here? Remember, our buy is here. Okay? Break is here, clear for me personally. Again, structure is subjective, but for me, I like to look for violent moves, big movements, right? Buy, sell. Buy goes up, just complete. I don't look at this as a buy, sell. You know what I'm trying to say? Like on a H1, sure. On a H1, sure. 100% agree, it's a buy, it's a sell. But when I'm looking at the H4, I'm dealing with the H4. A lot of people ask questions like, hey Avi, on the M5, it looks like a break, but then on the M15, it's just a wick. What do I do in that situation? My question is, what on earth do you want to do in that situation? There's an M5 bullish break. Why on earth do you care what happens on the M15? If structure breaks on the daily, do you think on the monthly it's going to break as well? Nah, unless it closes. No, it's not. If the daily breaks, the monthly is going to leave a wick. So what do you do then? It's just not a daily break? Nah, it's still a daily break. It's just that it's a break on the daily time frame. Similarly, if you get a bullish break on the M5 but not the M15, so the M15 just shows a wick like it's a stop hunt, okay, that's still a break on the M5, right? It's not a break on the M15, sure, but it's a break on the M5 though. You know what I'm trying to say? So there's a lot of very silly questions people ask. I mean, there are no silly questions, but I take that back. There's a lot of silly questions. I'll be very honest with you. There's a lot of questions which common sense can answer. If you see M5 makes a break, 15-minute doesn't make a break, what does that tell you? That just tells you that the 15-minute doesn't break or didn't break yet. But it does tell you that the M5 did break. It's very commonsensical and logical. But anyway, coming back to this. Take the liquidity, break the structure, and H4 failure to create a higher high. Now let me draw some real quick. I'm an artist sometimes they call me. Right? Some may say I'm an artist. Pablo Picasso they say. Right? Alright, so let's take a look at this then. I'm drawing this as liquidity, okay, not structure. Liquidity being taken. Alright, and then okay, now can you guys see this and read this? Stop hunt, structure break here. Up here, you guys get the point. Okay, up here, and then here, low, failure to create a higher high. So we expect this low to be taken. Very simple, guys. Actually, let me show you guys something real quick. When it comes to inducement, keep two things in mind. Or lower low. So first thing is when it comes to inducement, all right, you want to look for a weak high or a weak low. What is a weak high or a weak low? A weak high or a weak low is a higher low that fails to create another higher low. For example, we have a low that's weak because it failed to create a higher high. We have a high that is weak because it failed to create a lower low. A failure to create a higher high or a higher low. In this case, we're bullish, right? So what? Failure to create a higher high. Second thing is just support and resistance or flip zones. That's it. Okay, so in this case, this low failed to create a high. If you look at this, right, from the left to the right, high, what do we expect? We don't have an inducement yet. We expect a sell. We expect one of two things. We expect like this, okay? We expect something like this. So if we have this, we expect either this, where price comes back and goes, or we expect this, right? So in this case, it's type 2, which is just a failure to create a higher high. Boom. So that's it. We just wait for that liquidity to begin right here. We don't buy from here. We know below this we can buy. So below this, we need to look for POIs, right? What are the two POIs we have? Well, when it comes to a smart money standpoint, we have ourselves a imbalanced closed price action down in here. We also, of course, have a H4 demand candle. Now this is over, I believe, 100 plus pips. Am I right? 112 pips, that ranges. What we can do then, we can refine it to a lower time frame. Be flexible. That's literally a keyword. Be flexible. And what I've refined it to is an M5 demand candle. Okay? Don't get confused. Oh, is this the inducement? Relax. What was the inducement that we found out? Right? We found out the inducement was here, this liquidity. So if you're confused, it's fine. but make sure your confusion is warranted. Okay, don't create a confusion. That's just not understanding. So we have a same thing that happened here. Literally, bro, it's the same thing. We take the liquidity, break the structure. In this case, we followed through. So this becomes the flip zone. Price comes back now in here, and then we buy in here, take the liquidity, break the structure, boom. Here, failure to create a higher high, liquidity here. So when price comes back, price can take the liquidity here. Price can just take it from the order block / demand, whatever you want to call it. So in here, we can look for buys, right? So here's a H4. We can go to the M5, for example. Just giving you an example. Hit to the M5. What do we see here? We have, don't confuse yourself. What do we see here? Again, just another showcase of how impulsivity does not matter. To me, personally speaking, personal opinion type shit, right? To me, impulsivity doesn't matter. How impulsive a move is. For example, if we look at this, taking the liquidity, high that caused the breakdown, that caused the stop hunt. So this is stop hunt, right? This is stop hunt, right? See the stop hunt, okay? High that caused the stop hunt, okay? And then here, what? Failure to create a higher high makes this a very probable zone. So for example, you could do with the imbalance close price action. You could do with the entire order block from here, right? Just stop loss below, or you could do, as I said, the imbalance close price action for some better RR. Why not, right? So that is what you can do, right? Again, when it comes to lower time frames, you could do something like this. You could do same thing on higher time frames, failure to create lower low. You can also do something that you so you could also do this, right? Nothing wrong with any of these three. Okay, you guys pick and choose your own thing, figure out your own rules, figure out what works best on different pairs, because different pairs are 100% different. And if anyone tells you that they can use the same strategy on every single pair and have the same win rate, same succession rate, they're lying to you. Simple as. But anyway, coming back to this, that is what that was. And so what's your target? Very simple. What's your target? Again, safe target. Okay, H4 failure to create a higher high. Okay, so we look for the buy. When it comes to target, all right, target is going to be the H4 weak high. Safe target is going to be the, I'll show you guys what I mean by this as well. So you bought here. Now okay, let me revise it real quick. Do you understand why you bought here? Do you understand why you bought here? You understand the weekly direction, or at least the weekly liquidity point, right? Drawn liquidity, whatever. Okay, H4, there's a bullish QM. Let's say you took a sell here above this high. Okay, yeah, you took a loss, whatever. But you're holding that buy to go and take this guy out. Or at least you've taken some profits here. You're aiming to take out some more profits here for your intraday, that is. That's it. That's done. Simple as that. Okay? Because of this bullish QM. Now price comes in here. This is another buy zone, right? You can't expect price to, just 100% just tank. No, you can't say that. Same way you can't say, price 100% going to take out this liquidity, because it didn't. Look, it didn't. It didn't take out the liquidity. So it's not even a relative equal high kind of issue. It never even touched it, right? Which is why I say structure first. So price hits in here, which is your POI for buys, because you have a bullish QM. If your inducement, price hits here, you look for your lower time frame QM to buy from. Simple. Because you don't know if price is going to come to this imbalance or inside this wick. So you wait for confirmation, which in this case, M5 gave you that. You enter. Where's your first take profit? Well, for me, your safe, your first take profit, your target, your major target's obviously going to be here. Why? Simple. This is the weak high to this strong low. Strong low, weak high, simple as that. That's it. Okay, that's your major target. When it comes to your safe target, however, your safe target's gonna be in here. So you bought in here, right? Your safe target's gonna be in here. Why here? Can anyone tell me why here? Because you need to understand that this is a H1 bearish QM with this as the inducement. Okay, why is that an inducement? Because if you refer to your H4, you can see how this high failed to create a lower low. So that becomes a weak high. Price can come and nick this like it did here and then drop as it did as well over here. So that's exactly what the point was that I'm trying to make. Okay, so over here is your safe TP. It's your safe TP. Take some intraday profits. Look at the profits, right? It's still 145 pips. Don't cry about that. It's 145 pips. People who trade EU would get that like in a freaking, 3 weeks, they'll get 100 pips. So be happy about that. Okay, gold always rules. But I'm just okay. But yeah, you have yourself a H1 coming from this daily. It's a bit of a worrisome thing, right? So you take some profits over there. No one can ever tell you price is going to come and take out this 100%, right? But price comes and it does in fact take it out. And now you're thinking, we're just going to go and take the liquidity over here. But people who've been paying themselves at logical take profit points, like I've mentioned, they've already gotten their money. Then what happens is, by the way, guys, note this down. Then what happens is the daily gives you a sign. A sign of what? A sign that it does probably, highly probably, not going to go up. It's highly probable that price is not going to hit up. Okay? By giving you a structure break to the downside. Simple as that. Now your objective, identify a liquidity point, and this entire thing in here becomes your sell POI. Identify the liquidity point though, of course. Right? And again, if you guys listen, man, I'm very open-minded with this stuff. If you guys want to add some ICT kill zones, heck, go for it, man. Go for it. Do whatever the heck you guys want to do with this stuff. But understand the fundamentals of it, which is that it doesn't matter what time of day you are, price is going to always respect market direction and market structure. Right? Well, I can't say always, but highly probable, because nothing always respects anything. There is going to be some times where it doesn't work out, sure. Right? But you get the point. So over here, we have that first move down. Now when we look at this, right, immediately on the daily time frame, mind you, on the daily time frame, we have our strong high, and we have our weak low. Simple as, that's it. Okay, but in this case your weak low moves to here. Okay, why? Because you can see price comes up and then goes down. This is our weak low, strong high, weak low. Okay, it's gonna be your target, so we'll mark that out real quick. So when price comes up, you know the daily has given you a hint that it wants to go bearish. Sure, price can do some nonsense like this. Sure, it can do that. I'm not denying any of that. Of course it can. That's a possibility. But we base ourselves off of facts. And the fact is that we're bearish on the daily at the current moment in time. And when we look at this, we can see we have a failure to create a lower low, high that failed to create a lower low because it left behind wicks, right? So if you're going to sell, at least wait for this high to be taken out. That makes a lot more sense. At least wait for this high to be taken out. Look for a POI, look for a point of interest inside here. Yeah, it's a massive area, but look for a point of interest inside there. Like this. This is just a 60 pip point of interest. If this was the EU, that would be like 15, 20 pips, right? So that's fine. This is gold we're talking about here, right? It's a pair that a lot of SMC guys don't even touch for whatever godforsaken reason. It's so damn easy to get paid from this thing. But price comes in here, after taking the liquidity, of course, and then we just look for a lower time frame. So if you look at a lower time frame, you can go to your M5. I like the M5, you know, if M5 work is nice, right? And we can already see the structure and liquidity sculpting what we needed to sculpt right here. Now you guys already understand your target, right guys? Do you guys understand your target? And I hope you guys, when you're looking at your own charts, I hope you guys are understanding where your safe TP could be as well. Okay, just like that. And then of course your entry is going to be right above the lick, or at this imbalance close right here, which if we were to drag out, it doesn't reach, which is exactly why I say, you know what I mean, don't cry when price doesn't react to your POI, because it took the liquidity anyway. So that's your entry right there. So what's going to be your TP? Well, let's talk about it real quick. Your first TP, we'll just use text for this, right? Your target, your major target's obviously going to be the daily week low. Simple as that. That's going to be your, okay, and then your safe TP, it's going to be this H1 inducement. That's it. That's literally it. It's but do you guys realize it's the same old thing over and over again, right? You guys realize it's the same damn thing over and over. Give me a second. Man, my throat's getting so itchy from talking so much. It's the same old thing over and over again. Taking the liquidity here, boss here or boss here, okay, break of structure, I mean, Okay, simple as that. Could be your first take profit at a 1 to 7, or what you can do is just observe the lower time frame for anything. Let's say here there's like a 1 minute, 5 minute bullish break or strike. Oh, maybe you want to take some partials. Okay, cool. Then next, what you want to do for yourself, you don't even have to take the buy. You don't have to take the buy. It's just that if price comes in here, observe what happens on a lower time frame. But if you observe, nothing happens on a lower time frame. For example, let's just use a 5 minute for example. There's no bullish break, right? So you can hold it. Makes sense for you to hold it. Over in here, perhaps you want to take some profits, right? So this is your safe TP. This is your nice TP. Your good amount of TP, right? 1 to 12, 1 to 13, and you're good, right? But it's just the same old thing over and over again, which is wonderful, which is just brilliant and wonderful. You have this liquidity down in here as well. That's literally how dumbass people think trend lines are used. That's not at all how trend lines are used. But anyway, you have that, and that could be your other TP, or you could just wait for the entire week to end, right? Wait for the entire week to end and then take your profits. You can do that too, right? But you set your own plan for your profits, your profit taking, your targets. That's not up to me. That's up to you guys. I'm here to just give you guys share a little bit of information that has been taught to me about smart money, and that's basically it. I did take a high risk buy in here as a hedge, and I got stopped out. I'm being very honest with you guys. I also took a sell in here and I got stopped out. But I took this buy as well, and I took this bloody buy, and I took these two buys, one buy, another buy in here. I took another, I took a buy from the bottom in here. Again, all these screenshots I shared. I took another sell up here. So I'm good. Don't worry about me. But for you guys, I hope this has helped, and I hope this has given you guys a little bit of context to the market and how you could have entered some of the trades that I took personally using smart money concepts. Anyway, guys, it's been your boy. Leave a like if you wish to. Leave a dislike if you wish to. Leave a comment if you want to. And I'll see you guys in the next one. Peace out. Have a wonderful day.